Hey everybody, Paul Rabelais here. I'm an estate planning attorney here to talk on this video today about what's the deal with this 5-year rule for Medicaid that many people hear about. Let's go back to the basics. Most people know that if when someone enters a nursing home, they have more than $2,000 of what I'll call countable resources, then they got to pay the nursing home out of their own pocket. Most people realize that, most people know in general what the nursing home costs in their area. In some areas around our country, it may be $6,000 a month or more. Married couples in a nursing home together, double that, 12, maybe to $15,000 a month. So you can go through the savings pretty quick. And so a lot of people realize or have heard that the home is not an asset that counts. But a lot of people don't realize that while the home is not what's called a countable resource, people can have a home and they just have to deplete their other assets. The rationale behind that is if the person goes into a nursing home and they get better, they can return to their home. However, if Medicaid pays the nursing home expense, Medicaid has a lien on the Medicaid patient's estate. And so the result of that is after the person dies, the home's going to have to be sold to pay Medicaid back. Anyway, most people also realize that, hey, you can't just at the last minute get everything out of your name and qualify for Medicaid because, or right before you went into the nursing home, you took everything out of your name. Most people realize that that's not something that's permissible. So now we got to talk about the 5-year rule and the penalties for transferring assets out of your name within the 5 years prior to going into a nursing home and qualifying for Medicaid. By the way, people sometimes look at me funny. They're like, 5 years? I thought it was 3 years. Or some people say, I heard it was 2 years. Well, a couple of decades ago it was 2 years, and then it was 2.5 years, and then it was 3 years, and it was 3 years for transfers to individuals and 5 years for transfers to trusts, and then back in, I think it was 2006, they just said it's a 5-year penalty period for all transfers. So most people, if they go into a nursing home, they would obviously prefer for Medicaid, our federal and state program, to pay the nursing home costs rather than having to pay for it out of their own pocket. But in order to qualify for Medicaid, or in order to have Medicaid pay the nursing home costs, you have to meet the state's definition of poor. Probably worth me saying at this point, the public, they use Medicaid, Medicare interchangeably, and they shouldn't. Those words all start with MEDICA, but they're two different programs. So Medicare is health insurance for people 65 and older, and Medicare doesn't pay for long-term care, that's skilled care in a nursing home. Medicaid is the program that pays for long-term skilled care in a nursing home if the person qualifies for Medicaid because they're kind of deemed poor under that state's definition of Medicaid eligibility. So part of the Medicaid eligibility rules are that, one, when they go into a nursing home and they apply for Medicaid, they can have no more than $2,000 of what's called countable resources. Countable resources is things like money in the bank, your checking, your savings, your CDs, investments that you may have, stocks, bonds, mutual funds, IRAs, or retirement accounts that you might have, real estate that's not your home, maybe some interest that you own in a business or in a limited liability company, also known as an LLC. All those things are countable resources, and Medicaid will not cover your nursing home expense, any of it, until you convert all of that to cash for fair market value and then spend all that money down. So some people say, they get clever. They say, hey, I got an idea. Let's just get all that stuff out of our name, and then, I'll apply for Medicaid with less than $2,000. Medicaid will cover everything. It's not that easy. So I think most people think that the Medicaid rules are kind of loosey-goosey, and it's kind of easy to get around them. Couldn't be further from the truth. Our Medicaid rules and our Medicaid manual is very complicated and very lengthy. In fact, here is the 25 pages of our Louisiana long-term care Medicaid manual that just talks about transfer of resources for less than fair market value. So you think, it would say, well, if you give your stuff away, you're ineligible. But there's 25 pages of detail, not to mention all the other provisions of the Medicaid manual that take up hundreds or thousands of dollars of additional pages. But first sentence, right out of the box, page 1 of the 25 pages, an individual who is applying for or approved for long-term care may not be eligible for payment of nursing home costs if they, their spouse, or someone else acting on their behalf gives away or sells an asset for less than fair market value. So right out of the box, transfer it or sell it. Some people say, well, I'll sell it for $1. Can't do that either. If you sell for less than fair market value, same penalty periods apply. Okay, so with that being said, the Medicaid manual goes on, and this portion of the Medicaid manual goes on and has many definitions regarding transfers. It has pages of what is a transfer. It has a section on exceptions to the application of transfer of asset penalties. Goes on to talk about a penalty period of how long someone is penalized if they made transfers, when that penalty period starts. Real important to know all of that. And even provisions on the return of transferred resources, where dad transfers resources out of his name and then realizes he shouldn't have and he wants it back, and all the Medicaid implications of all of that. So here's the deal. When someone enters a nursing home and applies for Medicaid, they had made transfers of their assets more than 60 months, 5 years, prior to the Medicaid application. Those assets that had been transferred in the proper form more than 5 years before somebody goes into a nursing home and applies for Medicaid, those assets are what the public would call protected. It gets really tricky when someone is going into a nursing home and they had made transfers within the previous 60 months. Essentially, if they get good help, they'll take one of 3 options. First option will be they won't apply, and all these options that they choose are based on when they made the transfers, what was the value of the transfers, and other factors. But when a person is going into a nursing home and they had made transfers within the previous 6 months, they'll typically take one of 3 courses of action. They'll not apply, let the 60 months from when they made the transfers pass, and then once those 60 months is up, they'll apply for Medicaid. Medicaid asks, have you made any transfers in the previous 6 months? Nope. And then so they would apply. They would be eligible for Medicaid. All other things, being appropriate. Second decision they make if they've made transfers within the previous 6 months is they may apply and get denied, but they're going to be assessed a penalty period based on the value of the assets transferred. And so some people want to apply and get denied, start a penalty period, let that run, and then they'd be eligible for Medicaid. Again, many factors go into that, primarily when the transfers were made and the value of the transfers. A third set of people who had made transfers within the previous 60 months will want to have the transferred assets returned to them, and then they'll have to spend whatever they need to spend down to the appropriate amount before Medicaid would kick in. So all of what I just went over, I'm just scratching the surface. Much more thought, discussion, information, education needs to go into these decisions before you make these decisions. So a couple of other points. If you're going to transfer assets out of your name and get that 60-month period started, you'll likely make transfers either to individuals or you'll make them to trusts. Most people, after they get educated and seriously consider the ramifications of transferring to individuals or a trust, they often transfer assets to a trust for a couple of reasons, mainly 2 reasons. One is a control reason. If you transfer assets to your 3 children, you've really completely lost control over those assets, and bad things can happen if the children go through divorces or bankruptcies or creditor problems or other issues, or relationships turn sour. You can say God bless you or Gesundheit on the comments below. So control reasons, you can have more control by transferring assets to a trust versus transferring assets to individuals. And then tax reasons are reasons why people typically transfer assets to very particular types of trusts. The tax reasons are both income tax reasons and capital gains tax reasons, none of which I'm going to get into on this video, but just because there's not enough time. So the summary here, if you take one thing away from this video, if you have any concerns that you want to make sure what you have worked for is protected in the event you need long-term care in the future, particularly if you need it in a nursing home facility, the number one thing that I want to get across to you is plan ahead. Too many people, Paul, I've been preaching to my mom for 10 years and she never wanted to do anything, and now look where we are. Or, Paul, I wish we would have known about this 5 years ago. So planning ahead is just, and ahead means at least 5 years before you enter a nursing home facility. Nobody knows when they're going to enter a nursing home facility. So we see a lot of people in their 60s, we see people in their 70s take some initiative because they want to protect what they have for their family, but you never know. Also, another summary point here, the rules are complicated. You got to get good help. 25 pages just on what's a transfer of resources and what's the consequences of a transfer. And then get educated through videos like this and through conversations with people who are really in a position to be able to help you. A couple of other points real important. Again, I just have this impression that a lot of people think they can get around. In fact, I know it's the case. I was talking earlier today to a gentleman. He's got a couple of $100,000 buried in his backyard. And so he will likely commit Medicaid fraud one day. And just to give you an idea of some of the stuff on a Medicaid application, whenever somebody applies for Medicaid, there's a very thorough vetting process and application. Question number 31 on the Louisiana long-term care Medicaid application: have you, anyone in your household, or anyone acting for them, given away, sold, or transferred ownership of any item of value, including but not limited to land, houses, life insurance, vehicles, or bank accounts in the past 60 months? You check yes or no. If you check yes, what was transferred or sold? When was it transferred or sold? Who was it transferred, sold to? How much was it worth? Was anything received in return? What happened to what was received? So you have to, of course, disclose all that. And then Medicaid can go verify many records. As part of a Medicaid application, you're going to give them permission to go to the IRS, to the property records, to wherever they need to go to verify that information is accurate. In fact, you'll sign a statement stating that you are aware of your rights and responsibilities. One of those states that if you purposely gave information that is not true, or if you withheld information, you have committed fraud. So you probably want to stay out of that arena. And then here's just a list of all the proof documents that you have to supply, from bank statements, statements of others, etc., etc., etc. It goes on and on and on. And then, like I mentioned earlier, you'll whoever the Medicaid applicant is, or whoever's applying on their behalf, will sign a statement just to get the Medicaid application rolling. By signing this application, I am giving my permission to the state of Louisiana and its agents to verify the information given on this application under penalty of perjury. I certify that all information contained in this application is true and correct, blah, blah, blah. So, big summary, plan ahead. There's this 5-year thing. People who plan ahead can protect everything. They can keep it in their family. They can keep it for themselves. They can pass it along to their loved ones. People who don't plan ahead, wait till the last minute, think, oh, I'll get around it later. Oh, I'll get around these rules because I can get around them because I'm sneaky. going to end up potentially losing everything you have and getting real frustrated and getting your family frustrated in the process. Hope that helps. Subscribe to the channel. Thumbs up if you felt it was worthy of a thumbs up. Share it with everybody you know who may have a similar desire to protect what they have. I'm Paul Rabelais. Have a great day.